Hey, what's up, everyone? Welcome back, subscribers, to my world of stocks. Hope you're all doing well out there. And welcome back, by the way, to our Buy Heavy series, where I bring you a new stock that I'm currently buying heavily myself on a major dip that I feel looks really attractive for the long term. And today I'm going with, no surprise here, another REIT. This time, though, in Federal Realty, ticker symbol FRT. Now, quick disclaimer. Obviously, whenever a stock is falling hard, there's going to be some issues and some risks to be aware of. So, as always, do your own research, make your own decisions. But for me personally, I just feel that the risk is more than worth it for me at these levels, especially for what is actually a dividend king that would otherwise, at any other time, really be considered a great stock to be investing in long term. However, I believe that some current macro headwinds are sort of clouding investors' judgment right now. And so I'm looking to take advantage of this opportunity while I still can. And I'll explain exactly why I feel this way in this video. So make sure you're subscribed if you enjoy these. Let's just go ahead and jump straight into it. Now, first things first, the most important thing to know about Federal's business is that they are, of course, a REIT, which I'll come back to in just a second when we discuss why the stock is down so much. But as a real estate investment trust, Federal owns various retail and other mixed-use properties like office and apartment buildings too, that it then rents out to clients, using that money to expand and make upgrades and so on. But while the majority of their rent does come from retail, they've actually done a great job of handpicking only the highest quality properties that are in prime locations across the United States. In fact, they prioritize quality over quantity by so much that despite being in business for over 6 decades, their portfolio consists of only around 100 different properties. Again, making sure that they're located in only the best high traffic areas with large population densities and high average incomes. The result of which, though, is that even with the whole retail apocalypse going on, where online shopping, especially from Amazon, has completely disrupted the physical retail landscape, well, FRT has actually been pretty well insulated from all of it, and I would argue that it's been one of the absolute best run REITs in the entire space. In fact, it's been run so well, I would say, that even during the 2020 pandemic, when most REITs were getting absolutely crushed, FRT was actually able to go out and acquire new properties to ensure future growth, like in the first assets they purchased from Phoenix, Arizona. Now, don't get me wrong, the pandemic was still a difficult time for the company, but sales have been growing every year since, with funds from operations outperforming their closest peers too, even during economic downturns. For example, during the '08 financial crisis, FRT put up many times greater performance than their peer average, which, as you can see, it wasn't even close, really. And yet, despite their business outperforming to such a high degree, the stock has actually crumbled in recent years. And in my opinion, it's mostly to do with interest rates, which is a headwind that I think will actually gradually be turning into a tailwind moving forward, hence why I'm buying the stock now. But let's just pull up the stock chart here so that I can better illustrate this for you. So historically, FRT, you can see it was a very strong performing stock, pretty much all the time. But then you notice these big drops appearing a little more recently. So like the first one of these big ones we can see happened during the Great Recession, which the stock then proceeded to soar from those lows on the back of the Fed lowering rates to zero. This happening, mostly during kind of the Obama years. Then Trump takes over at the end of 16, right? And of course, around that time, the Fed started to raise interest rates again, which sent FRT stock crashing once again. Then we hit the pandemic of 2020, where it crashed by even more with the rest of the market, really. But it later recovered from that, but only to start crashing once again when the Fed started raising rates once more to combat all of the new inflation that we got from the pandemic. But in other words, what I'm trying to illustrate here is that this stock, like most REITs too, is extremely sensitive to our interest rate environment, as they make borrowing debt more expensive and competing bond yields more attractive. And that's essentially where we are today, with the stock way off of the highs and actually trading at one of the lowest prices of the past decade, down over 30%. It's lost around a third of its entire value during that time. And again, even more from the top. But here's where the opportunity really starts to come in my opinion, because the Fed, as we all know, is now starting to lower rates once again, having already implemented a cut last month and signaling another 2 cuts by the end of this year, which will very likely continue throughout next year too. And so, my point being that what used to be Federal's biggest headwind by far is now turning back into a tailwind. Yet the market seems to be slow moving on this news on the stock, having not yet really reacted to this change of events, which in turn means that picking up the stock today gives you one of the highest dividend yields that it's ever paid out at over 4.5%. In fact, most of the time, investors would be happy to collect even just around half that amount. And a big reason why is because this is also one of the absolute best dividends in the entire market that investors would normally be willing to pay a premium for, because it's been grown every single year for over 5 decades in a row. In fact, Federal Realty is literally the only REIT in the entire world to be considered a dividend king. Let me say that one more time in case you didn't hear it, maybe you weren't paying attention. Out of all the REITs out there globally, the entire world, only one of them out of all of them is considered a dividend king, and that is Federal Realty. That's a huge deal, guys, and I think it deserves a premium just for that fact alone, because dividend cuts are pretty common among REITs who have to reduce their payouts during recessions, real estate downturns, or even rising rate environments. But unlike those, Federal is unusually stable because of their higher end retail properties in wealthier areas that kind of shields it from much of that volatility. And yet, again, here we are with the stock actually down as much as it is. So, like I said, do your own research, make your own decisions. But for me, this is about as much of a screaming buy as I can find in the market right now. There's just not like a giant amount of amazing deals out there as the market continues to break new record highs. There are some, but not to this degree, not too many, I would say. And so, seeing a stock like this trade where it is, I do in fact think that it looks pretty attractive here, and it's worth picking up for my portfolio. But again, that's just me, just what I'm doing myself. I'd love to hear your thoughts down below. Let me know if this is a stock that you're at all interested in, or if there's any other REITs or maybe even just dividend stocks in general that you're buying out there instead. I'd love to hear from you, and maybe I can talk about them in a future video too. So anyway, thanks again for stopping by, my friends. I hope you're all doing well out there. I thank you for all of your support. Now we'll catch you in the next one. All right, take care, everybody. Bye-bye.